Today, I want to have a candid chat with you, my dear friends, about what's really happening in the world of crypto right now. There's a lot of noise out there. People are getting distracted by politics, central banks, and the endless debates about speculation. But remember why Bitcoin, and by extension, the entire cryptocurrency ecosystem was created in the first place. It was meant to disrupt that very system, to bring power back into our hands. So let's focus on the important stuff, the developments that truly matter. All right, let's kick things off with what's happening over at Sky, previously MakerDAO. They recently had that rebrand. Now, recently, their community overwhelmingly voted 88% in favor, with 0 votes against, to offboard wrapped Bitcoin, WBTC, from their platform. So now you might be thinking, well, what's the big deal with wrapped Bitcoin? Well, here's the core issue, and it's centralization, apparently. Wrapped Bitcoin is closely tied now to Justin Sun. And as much as we talk about decentralization in the crypto space, we have to face the fact that certain assets like wrapped Bitcoin carry the baggage of centralized control. Now here's where it gets ironic. Are you ready? The Sky community is looking at alternatives to wrapped Bitcoin, of course, but one of which is being offered by Coinbase, a centralized exchange. And Coinbase also, by the way, is the custodian used by nearly every, I think it's 10 out of the 11, spot Bitcoin ETF providers in the US. You see the irony, right? The quest to avoid centralization leads to them to consider yet another centralized solution. But there is something positive here too. It's great to see community governance at play. And with the Sky DAO now making decisions through a vote, however, it's important to mention that only 13 whales participated in this 3-day voting period. So yes, community governance is happening, but it's still limited to a small subset of powerful players. And this should remind us all that DAOs have a long way to go in terms of engaging the broader community. But that journey is well worth it because we need more participation to realize the true potential of decentralized governance. Moving on, let's talk about BlackRock. They've been making some interesting moves lately, and it's not something we can ignore or should ignore. BlackRock has been vocal very recently about the risks posed by the precarious US debt situation. And what's their solution? Bitcoin? Can you believe it? Yes, you heard that right. Bitcoin as a hedge against fiscal, geopolitical, and political risks. This might seem like a major endorsement, but let's be clear. When institutions like BlackRock or JP Morgan or anyone like them make public statements about Bitcoin, they often have a hidden agenda. When they speak negatively, they're usually buying at lower prices because they're trying to drive those prices lower by speaking negatively. And when they're bullish, it often means they already have a position they're looking to sell at higher prices. In fact, let's consider the size of BlackRock's Bitcoin ETF compared to their gold ETF. The iShares Bitcoin Trust ETF holdings are currently valued about $22.6 billion, whereas the iShares Gold Trust is worth about $30.5 billion. This shift signals a deeper institutional interest in Bitcoin as a long-term asset, not just a speculative tool. But here's the big question. Will you fall for it? When the time comes and these institutions start making negative comments again to lower Bitcoin's price for their own gain, will you panic sell? Or will you have the conviction to hold, knowing the long-term value of Bitcoin? This is why it is so important to understand the true purpose of crypto so you're not swayed by market manipulation. If you're wondering what is a good resource to obtain that type of knowledge, a great resource for you to learn about the fundamentals of Bitcoin and cryptocurrencies is learningcrypto.com. Go check it out after this video. But now let's talk about AI and its growing intersection with the crypto space. Recently, BlackRock and Microsoft announced a whopping $30 billion investment into an AI-focused fund. And if you thought Bitcoin's energy consumption was controversial, let me tell you, AI is taking that debate to a whole new level. The energy demands of AI are already enormous, and it's clear that these two giants are positioning themselves to control how AI is powered and developed in the future. This is significant because it highlights the evolving priorities of these major players. At one point, energy consumption was the critique of Bitcoin, but now the same companies are pouring billions into even more energy-hungry AI technologies. Now, what's more interesting is the commonality among top shareholders of BlackRock, which are Vanguard, State Street, Bank of America, and Microsoft, which is Vanguard, BlackRock, and State Street, and NVIDIA. Say it with me. Vanguard, BlackRock, and State Street. It's crazy. The significance of BlackRock, Vanguard, and State Street being the top shareholders of each other's companies, such as NVIDIA and Microsoft, and now investing billions into AI and their data centers, it reveals a deep interconnection and strategic consolidation of power within the financial and tech industries. These institutional giants are intertwined in such a way that they have substantial influence over each other. As major shareholders, they can collectively sway corporate strategies, policies, and direction. Their intertwined holdings in key tech companies like NVIDIA and Microsoft and their own funds mean they hold significant sway in the future of AI and related technologies. This raises concerns about centralized decision-making within industries that are meant to be decentralized and innovative. By investing in AI while owning significant stakes in each other's firms, these entities can blur the lines between financial influence and technological innovation. In fact, their collective power allows them to decide how resources are allocated, potentially making AI development a tool for further financial control rather than a democratized technology accessible to all. Now, in essence, this concentration of ownership and investment power among a few players raises concerns about reduced competition, limited accountability, and how much control a small group of institutions will have over the most transformative technology of our time. And don't think for a second that AI and crypto exist in separate worlds. AI is already being used in cryptocurrency markets. Everything from trading bots to advanced predictive models are all powered by AI. The more AI evolves, the more it will be used to shape and possibly manipulate markets, including crypto. And BlackRock's massive investment in AI signals a future where these technologies will be tightly intertwined. So where does this all leave us? Here's the bottom line. Crypto was born out of a desire to give power back to individuals, to break away from centralized control. But as you can see, the forces of centralization, whether it's in the form of wrapped Bitcoin, institutional manipulations by the likes of BlackRock, or the growing influence of AI, are always lurking. And believe me, I know it's easy to get distracted by the noise, but I urge you to stay focused. Don't let the fear-mongering of traditional financial institutions steer you off course. Understand why Bitcoin and cryptocurrencies exist. Build your knowledge and strengthen your mindset. That way, when these large players do inevitably try to shake the market, you'll be ready and you'll be in control. Thanks so much for listening. I'll catch you all the next time. Stay decentralized.